Welcome back to the Deep Dive. Today, we're diving into some really interesting source material, stuff that points to a massive moment happening right now in finance. We're talking about the full integration, really, of digital assets into the mainstream banking system, sanctioned integration.
Yeah, it's a big shift. For years, the story was always crypto versus the banks, right? Or maybe banks scrambling to catch up.
Right.
But today, it feels like the narrative's kind of flipped.
Yeah.
The banks are, well, they're starting to just absorb crypto. And we've got some solid news showing this tectonic shift.
Okay, so let's unpack this one for you. Our mission today is to really get into the strategy and maybe more importantly, the regulatory trigger that made this particular piece of news possible.
And the news is SoFi.
Exactly.
Yeah.
SoFi, huge publicly traded firm, NASDAQ ticker SoFi. They've officially launched SoFi Crypto.
And this isn't some minor side project.
No, not at all. This lets their, millions of users buy and sell something like 30 different assets. You've got Bitcoin, Ethereum, Solana, the big ones.
All directly inside their existing bank accounts.
Inside the bank account, that's the key.
And look, if you followed SoFi even casually, this is a pretty big plot twist, wouldn't you say?
It really is. Because they aren't new to crypto, but they actually, they shut down their first attempt, right, back in 2023.
That's right. They had a smaller crypto trading feature, and they just stopped it, bowed out. So for them to come back now, fully integrated like this,
And federally
registered, positioned as a core financial tool, not just an add-on, it signals a very calculated shift. Their CEO, Anthony Noto, he put it pretty plainly. Today marks a pivotal moment where banking meets crypto in one app.
Okay, so that quote immediately brings up the big question, right?
Yeah.
Why the change of heart? Why now?
Yeah.
What structural thing changed between 2023, when they kind of gave up on it, and today? What makes a big player like SoFi jump back in, considering the scale and, frankly, the risk?
Well, it wasn't just, suddenly more people wanted crypto, though I'm sure that helped. The single biggest factor, the thing that really changed the risk calculation, it wasn't tech. It was policy.
Policy.
We really have to zoom in on the regulatory green light from the Office of the Controller of the Currency, the OCC.
Right.
They issued this really crucial interpretive letter back in 2025. That's the key.
The OCC 2025 ruling. Okay, yeah, we know that made waves. But for folks who aren't regulatory lawyers, what did that ruling actually do? What does it let banks do now that they couldn't or wouldn't do before?
So before this letter, banks were stuck in this kind of gray area. Often they could maybe act as custodians, holding the keys, but usually just for big institutional clients.
Right, holding but not trading for regular people.
For banks, like SoFi, the explicit legal okay to not only custody crypto, but also to directly handle the retail trading execution for their clients, treating it almost like any other financial service they offer.
So it's not just guarding the digital vault anymore. It's actually operating the marketplace inside the bank, under federal oversight.
Precisely. And that's why we're saying this really moves crypto trading out of, let's call it shadow finance, and puts it squarely onto Main Street's balance sheet within the regulated system.
That makes sense. We've seen companies like Coinbase and Circle trying for years to get national charters, trying to become more bank-like, right?
Exactly. They've been pushing for that. But here's the flip side. You have SoFi, already a publicly traded, federally chartered bank.
Already in the club.
Already in the club, yeah. And they're one of the first big ones to actually integrate and roll out retail crypto trading because of that ruling. The infrastructure that changed wasn't physical, it was the regulatory classification.
Okay, let's dig into that federal charter status for a second. What does that practically mean for me, the consumer, compared to using, say, Coinbase or Robinhood? They operate under different rules, right? State licenses, mostly.
That's really the core of SoFi's pitch, their competitive angle here. A federally chartered bank operates under this comprehensive nationwide oversight, regular audits, specific capital requirements, stuff that exchanges operating state by state often might not face at the same stringent level.
Okay.
So when you buy crypto through SoFi, you're doing it on a platform that's already deeply embedded in that, let's say, more traditionally secure financial system. It kind of flips the trust model.
How so?
Instead of you trusting a crypto-native exchange to handle complex banking rules correctly.
Right, hoping they don't mess up the fiat side.
Yeah. You're trusting your established bank, which you presumably already trust with your money, to navigate the crypto rules correctly.
Interesting flip. Okay, speaking of trust, let's connect this regulatory freedom back to SoFi's strategy. Noto, the CEO, he has these big ambitions, right? He talks about blockchain fundamentally changing finance, making money faster, cheaper, safer.
Yeah, the grand vision.
But how does that vision land with consumers today? Especially, after the whole FTX saga and other blowups. People are wary.
Yeah, definitely wary. And this is where I think we're seeing maybe crypto's Apple moment, if you will.
Okay, explain that analogy.
Well, think back to early digital music. If you wanted MP3s, you were like burning CDs, messing with codecs, figuring out file structures. It was clunky, kind of technical, prone to errors.
Right, not user-friendly.
Not at all. Then Apple comes along with the iPod and iTunes. They simplified everything, made it seamless, and crucially, injected trust and ease of use into the whole thing.
So SoFi wants to be the iTunes for crypto. Take away the friction, take away the fear.
That seems to be the play. And the timing post-FTX is key. People are, frankly, tired of chasing crazy yields on platforms that might disappear overnight. They want usability and security.
Makes sense.
And we have some hard data on this from the sources. So SoFi did internal research, found that 60% of their members who already own some crypto said they'd much rather buy and hold it with a licensed bank.
60%. Wow, okay, that's not a small number. That's a huge chunk saying, give me safety, give me structure.
Yeah, it really is. It's like bank-grade compliance is the new killer feature, maybe more than just low fees or token variety for that segment.
So that's 60%. That's the gap SoFi is trying to fill, the confidence gap.
Absolutely. They're leveraging that desire for institutional protection. It gives them an edge, maybe, against both pure DeFi and even some of the big centralized exchanges, just because they start with that federal charter and the reputation that comes with being an established bank.
Okay, so let's get practical. What does the user actually see today? What's the experience like in the app? 30 tokens, the big names are there.
Yeah, the experience seems designed to be really straightforward, integrated, seamless. You can basically hit buy or sell instantly using funds right from your FDIC-insured checking or savings account.
So no wiring money to a separate exchange, no waiting?
Nope. No separate KYC process if you're already a SoFi customer. No need to manage separate crypto wallets for basic trading. It's all just there inside the main SoFi app's simple interface.
30 tokens is a decent start.
Yeah.
Includes the majors. But it's not, the thousands you see elsewhere. Is that selection strategic? Or are there maybe OCC rules limiting which coins a bank can touch?
It feels very strategic, more risk management, I'd say. While the OCC letter opened the door, it didn't just say anything goes.
Right.
For a publicly traded bank like SoFi, sticking to maybe 30 well-established high-liquidity assets, your Bitcoins, Ethereums, Solanas makes sense. It minimizes potential regulatory headaches, ensures they can actually handle the trading volume, and avoids the reputational risk of listing, super speculative microcap stuff.
Protects the brand, protects the balance sheet. Got it.
Exactly.
And it sounds like they're not planning to stop at just buy and sell, right? The sources mentioned a coming soon angle.
Yeah, there are hints of more advanced features down the line, things like staking rewards potentially, maybe crypto-backed borrowing, even ways to tap into DeFi yield tools, but presumably through SoFi's regulated interface.
Okay, that would seriously deepen the integration.
Yeah.
And potentially the revenue.
That seems to be the long game. And the stock market noticed on the day they launched this, SoFi's stock, SOFI, it ticked up almost 1%. Closed around $30.80. And year to date, the stock's performance has been really strong, up over 100%.
Okay, let's pause on that. A 1% bump might not sound earth-shattering, but why is Wall Street paying attention? Why does that matter?
It matters because it signals a shift in how analysts view crypto for banks. Before, any crypto involvement often came with this sort of regulatory discount baked into the stock price. It was seen as risky, uncertain.
Danger zone.
Yeah, exactly. Now, with the OCC's blessing, analysts are starting to re-rate it. They see these regulated crypto transaction fees coming from existing bank customers as potentially stable, predictable revenue. Not like the wild boom and bust fees sometimes seen on less regulated exchanges.
So the 1% jump isn't just noise. It's confirmation that the market sees this as a viable, potentially profitable, regulated business line now.
That's the interpretation, yeah. It confirms the model has legs in the eyes of investors.
And that stock movement kind of tells the bigger story here, doesn't it? The line between what we think of as a bank app and a crypto exchange app is getting really blurry.
It's disappearing. It pushes the whole user experience towards this single integrated financial hub.
Right. Why juggle multiple apps if your main bank can handle everything you're checking, savings, loans, investments, and your crypto all under one roof?
And importantly, under the roof of an institution you likely already have a trust relationship with, protected by those established regulatory guardrails.
Okay, so that brings us to the really big picture takeaway. This wave of mainstreaming crypto. It's not really being driven by the DeFi diehards or the scrappy startups anymore, is it?
Not this phase, no. This feels different. It's coming from inside the house now. It's being executed by the big regulated institutions themselves.
Which is kind of ironic, isn't it?
It is. For the better part of a decade, banks and regulators were mostly focused on either fighting crypto or trying to wall it off. Now, they seem to have accepted the underlying tech, maybe seen the demand, and they're actively building it into their core offerings.
Following the fintech playbook a bit, like PayPal, Robinhood, Cash App showed the way.
They're definitely using elements of that playbook, yeah. Integrating crypto buys and sells. But they're adding that crucial layer on top, the federal charter backing, the implicit promise of greater stability and oversight.
So the revolution, or maybe evolution, is happening, but it's being deployed by the established centralized system.
It appears so. And, this leads to a pretty straightforward prediction, I think. If this SoFi model works, if it's regulated smoothly, if it proves popular, if it drives real revenue,
Then
you should fully expect the other big players, think Chase, Citi, Wells Fargo, Bank of America, to follow suit. Probably pretty quickly. Why wouldn't they?
right, the competitive pressure would be immense.
Exactly. Adoption stops being an external threat they need to defend against and becomes an internal product imperative they need to offer. It becomes table stakes within the traditional banking world itself.
Wow. Okay, this has been a really thorough deep dive. We started with that big SoFi news, walked through the absolute linchpin, that OCC 2025 ruling.
A regulatory catalyst.
Yeah, the catalyst. Then we looked at how that connects to what consumers want now, that shift towards trust.
Post FTX trust, yeah.
And finally, what it means for the market, for the stocks, and for the future shape of banking. The fact that regular folks can now use their normal FDIC-insured bank account to instantly buy Bitcoin or Ether, that really is a game changer for accessibility and maybe perceived risk.
It fundamentally changes the entry point. It could shift crypto from being seen primarily as this niche, tech-savvy investment class to just another feature your bank offers, like stocks or savings accounts. Much more mainstream.
Absolutely.
Mm-hmm.
Now, before we get to our final thought, just a quick reminder. If you got value out of this discussion today, if you find these deep dives into how crypto, banking, and regulation are colliding useful
And hopefully interesting.
and interesting, yes, please take a second to subscribe, maybe leave a comment, engage with the show. It genuinely helps us out a ton with visibility. You know how the algorithms work, and it lets us keep bringing you this kind of in-depth analysis.
Yeah, your support really does make a difference. And think about it. SoFi just put crypto trading inside a checking account. If that's not a signal that digital assets are moving from the fringes to the core of the system, I don't know what is.
It's a powerful signal indeed. Okay, so here's the final provocative thought we want to leave you with today. This big push we're seeing by federally chartered banks getting into crypto custody and trading. Does it ultimately strengthen the future of digital assets? Does adding all that institutional trust and massive accessibility make crypto stronger in the long run?
Or does it perhaps dilute or even weaken the original decentralized ethos of the technology? What's the real cost, maybe, of achieving bank-grade compliance? Does the blockchain movement lose something fundamental in this embrace by the traditional system?
Something to chew on? What do you think? Let us know. We'll see you next time on The Deep Dive.